Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Nasdaq. The indices was mostly flat on Friday, capping off a strong week as investors assessed trade policies and inflation data. Despite Friday's pause, all three major indexes finished the week in positive territory. S&P 500 up 1.5%, Dow up 0.6%, Nasdaq up 2.6%. Markets reacted positively after Trump outlined a gradual tariff approach, easing concerns over trade tensions. Inflation data also helped sentiment, with softer-than-expected readings for PPI and CPI hinting at a milder PCE report ahead. Meanwhile, the 10-year Treasury yield fell to 4.478%, supporting equities by reducing pressure on interest rates. NASUSD, H4. Major indices rise as February begins, with the Nasdaq leading the way by surpassing the 22,000 barrier. While some consolidation is expected in this new range, the overall outlook for the U.S. economy remains bullish. Gold price dropped over 1% on Friday due to profit-taking, but remained on track for a seventh consecutive weekly gain, up 0.7%, supported by trade war fears and inflation concerns. Spot gold fell 1.5% to $2,883 after hitting a record $2,942 on Tuesday. Analysts note technical resistance at recent highs, but the broader trend remains bullish, driven by tariffs, inflation, a weaker dollar, and rising demand for physical gold. Trump's call for reciprocal tariffs could further fuel safe haven demand. Meanwhile, retail sales fell sharply, signaling economic slowdown, while rate cuts are not expected until September due to persistent inflation. XAUSD 1-hour chart. The current level could be pivotal for short-term gold trading, as it forms a double top at $2,940 and a potential triple bottom at $2,880. We anticipate gold to trade within this range in the week ahead. PDD. Michael Burry, known for predicting the 2008 financial crisis, has made a notable shift in his Chinese stock holdings, signaling confidence in PDD holdings, also known as Pinduoduo. In the fourth quarter of 2024, his hedge fund cut its stake in Alibaba by 25% and JD.com by 40%, but added a new $7.3 million position in PDD, the parent company of Temu. Notably, PDD was the only major Chinese e-commerce stock he increased exposure to, suggesting strong conviction in its growth potential. With China implementing rate cuts and stimulus measures to support its economy, PDD could be well-positioned to benefit, especially as consumer demand rebounds. Investors looking to follow Burry's moves might consider PDD as a compelling opportunity in the Chinese e-commerce sector. PDD Weekly. Over the past year, the stock has traded within a range of 100 to 150, establishing key demand and supply zones. As it enters 2025 with strength, we expect it to test the resistance within the next 1 to 2 months. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.